The state of California is imploding as we speak. There's a mass exodus of people, home sales are collapsing, and now the job market is even going into a recession. How long can this last for before the state of California utterly collapses and home prices go into a crash? I'm going to cover these topics in this video and also take your requests as California home buyers and investors so you can understand what's coming in the local housing market. And the first thing to understand about California's housing market is just how expensive it is to buy a house in 2025. You can see that currently the average home buyer needs to spend 57% of their gross income to afford a mortgage and taxes in California. 57% of gross income. That's the highest it's ever been, and it's well above the long-term average. This historic lack of affordability has now caused home sales to plummet by 40%. So we have the lowest buyer demand in California that we've literally ever seen. The fewest number of home sale transactions ever occurring due to this lack of affordability, and we still have a huge amount of people leaving. 240,000 people left the state in 2024. And this confluence of factors is making me think that California's housing market is running out of time. How long can this go on for? How long can this situation last? And will we continue to see people leave the state? And why is this even happening? California used to be such a great place, such a beautiful place, and now hundreds of thousands of people are leaving every single year. And one of the main reasons why people are leaving, everyone, is taxes. California is an extremely expensive place to live, not just to buy a house or rent an apartment, but in terms of just like paying money to the government. California has the highest state income tax in America. 13.3% is the top marginal income tax rate. And you can see that this is a tax rate that pretty much dwarfs other states. California is here at 13.3. The only other state that's even close in terms of state income taxes is New York at 10.9%. Everywhere else is below double digits. Oregon and Minnesota are close. And then you get into states like Nevada, where there is no state income tax in Nevada. So you have people leaving California going to Nevada, people leaving California going to Texas, where there's no state income tax. And you would say to yourself, maybe it was worth living here and paying these crazy state income taxes if you could either afford to buy a house or it was good for your career. But the big problem now is that not only are you paying those high taxes in California, not only can you not afford to buy a house, now you can't find a job in California because California's economy is in a recession. The unemployment rate in California is now up to 5.5%. It's the second highest or third highest unemployment rate in America, and the job openings are plummeting. So what is someone in California to do? What are they to do? They're paying all these high costs. They can't buy a house, and now they can't find a job. And this data is really shocking. A lot of people in California don't actually know this, that the economy here has entered a recession. And the way that we know this, everyone, is a data point from Indeed on job postings on Indeed in California. Take a look at this, everyone. The benchmark prior to the pandemic was 100. Then job postings spiked during the COVID stimulus boom, the tech boom. Job postings went up 50% in California. But look at what's happened since then. Job postings on Indeed, the amount of businesses going to Indeed looking for employees has collapsed by almost 50% in the last 3 years. And now the job postings on Indeed in California are 17% below where they were before the pandemic. So you can't find a job in California now. These job postings, like, small businesses aren't employing, big corporations are laying people off. And this is something that's unique to California, because if we were to actually look at some other states, and I just want you guys to get this context, because some people are going to tell me, oh, Nick, that data from Indeed maybe is biased or whatnot. You can see that in many other states, we have way more job postings than we did before the pandemic. In Arizona, we have 8% more job postings. In Arkansas, we have 20% more job postings. In Colorado, we have 5% more job postings. In Connecticut, we have 9% more job postings. Yet in California, job postings are down 17%. From where they were before the pandemic, according to data from Indeed. And the reason is because the industries that propel California's economy and boost its tax revenue are in tech and media. So tech and media right now, those are the two sectors that are getting absolutely hammered in terms of layoffs, in terms of a reduction in hiring. Job postings for software developers are down over 30% from where they were before the pandemic. And even with the kind of boom in AI, that boom in AI is not actually leading to more jobs in California. If anything, it's causing more layoffs and reduced hiring. And the point is, if you've been a home buyer and investor waiting in California, now soon might be your time. Because all of these headwinds are stacking up one by one on top of each other. Now soon might be your time to buy. Not quite yet, but pretty soon. I'm going to show you the data here. Because home values in California are now starting to go down as a result of all these headwinds, as a result of the collapse in home sales, as a result of the collapse in job postings, as a result of the continued outbound migration. We are now seeing home prices in California actually start to go down. Now, they're not going down by a lot quite yet, but take a look at this. They're down 1.6% in the last 12 months, according to data available on Reventure App. This data on Reventure App, folks, you guys can access it actually at the end of this video by going to www.reventure.app and checking out the data for your zip code. But you can see values are down 1.6% in the state of California in the last 12 months. Now, that's not a whole lot considering values went way up during the pandemic. So the typical value of a house in California went from around $530,000 before the pandemic to $762,000 today. And that's not for a nice house. That's for any house in California. Like your typical house, including like Inland Empire and all those places, $760,000. Can you believe that? And your mortgage payment, if you were to buy a house in California, I mean, it's unbelievable, folks. You're not going to believe it. $4,800 a month. Mortgage, tax, and insurance to buy a house in California. 10 years ago, it was $1,900 a month. It was actually semi-affordable to buy in California 10 years ago. Now, the cost to buy has tripled. So we have this huge increase in the lack of affordability. And you would say to yourself, okay, maybe it'd be worth paying it if I could find a job. Maybe it'd be worth paying it if I could keep, more of my savings and not pay it to the government. But you can't. You're paying 13% state income tax. Job postings are plummeting. If you work in tech and media in California, you're feeling the recession right now and having to pay this crazy mortgage cost. And we can see if we zoom in here on Reventure App on some different areas, where are the home values going down? Well, home values are actually going down in most parts of California right now. But they're especially starting to go down in the Bay Area. So home values in San Francisco, Oakland, Fremont are down 3.8% in the last year. In Napa, they're down 4%. In Sacramento, they're down 2%. And if we actually look from the middle of 2022, there's actually been a little bit of a correction that's played out here. Sacramento's down 7% since the middle of 2022, over 3 years. Again, not huge, but there's been a bit of a correction in Sacramento. In San Francisco, it's down 11% since the middle of 2022. So, we do have some declines, and actually in some of these northern areas like Truckee, Clear Lake, and is it Ukiah? Am I pronouncing Ukiah correctly? Values are down 19%. I know some of these areas struggle with wildfires, right? Some of these Northern California areas struggle with wildfires, and people have left. Now, the areas that are doing better over the last 3 years in terms of home prices are Central Valley. Fresno, Visalia, Bakersfield, values up anywhere from 2 to 7% since the middle of 2022. So we're still seeing some Central Valley resilience in terms of prices the last couple of years, and we're seeing some of that resilience in Southern California. Interestingly, El Centro is up 16% over the last 3 years. San Diego's up 3%, Los Angeles up 4%, but year over year, these markets are now declining. So San Diego is now down 2.5% year over year. El Centro is still up 5.7%. If you guys in the comments on the live stream want to tell me why El Centro is continuing to go up, please let me know. But we can also see there's if we go into the county view, everyone, and what you should do at the end of this video is check out this data for your county. You can see Orange County still kind of going up. Orange County still kind of holding on, but Riverside County is down 2%. San Bernardino's down 1%. Los Angeles down 1%. Now, for many of you as home buyers, that's not going to mean a whole lot, right? Prices going down 1%, 2%. That's not going to cause you to rush into the market, right? Especially if you have to pay $1 million to buy a house or $700,000 to buy a house. But it is worth noting that the values are going down in California right now. And we know why they're going down. I just laid it out for you, right? The decline in job postings, the decline in home sales, the continued outbound migration. I mean, folks, California has lost people now for 30 years in a row due to domestic outbound migration. I mean, this is a crisis. This is a major crisis in California right now. 240,000 people fled the state in 2024. And that was an improvement from 2 or 3 years ago, but it's still horrifically bad. I mean, we have a metric here on Reventure App, everyone. I don't know if you guys have used it. The domestic migration figures by market. It's a sea of blue. It's a sea of blue. In Los Angeles, we lost 99,000 net people in LA County. But what do you see here, folks? LA County's lost people for 35 years in a row domestically. The only thing fueling LA County's population the last 5 years especially has been international immigration. And we all know international immigration is going down in 2025. So the fact that California and LA lose so many people on domestic migration every year is going to start to weigh down the housing market. Even San Diego loses people, folks. You know, a lot of people in San Diego like to say, oh, everyone from LA comes down to San Diego. Well, people are still leaving San Diego because they can't afford it. San Diego County lost 24,000 people in 2024. You can see that's pretty high. The only period really was from 2008 to 2015 where San Diego held people, and it's just incrementally lost more people every year since then. What about San Francisco? How is San Francisco doing on migration? And folks, this migration data really matters for you because if you're buying a house, if you're buying an investment property, you want to buy in an area where the migration's strong. Now, San Francisco's wild. It lost 58,000 people in 2021 during the pandemic. Look at that, like pandemic exodus. It's since improved, only lost 5,500 people, San Francisco County in 2024. So still losing people. San Francisco more or less always loses people. And so we have a story here in California of consistent, persistent exodus. The people who are born and raised in California can't afford to live there. They're forced to leave. They're then replaced by international immigration. They're replaced by H-1B visas. And that's been just a scenario in California's economy the last 5 to 10 years, really the last 20 years. And California's housing market's gone through some big booms and busts. You know, there was a huge crash in 2007. Prices dropped 40%. There was a huge downturn in the early 90s. Prices dropped in the early 90s by about 20% in California. So could we be seeing another 20 to 40% decline coming in the future? I'm going to get into that data in a second. But first, I actually want to take some of your requests here in the chat because I can see that this chat is very lively, very active right now. If you guys live in California, do you agree, with the things I'm saying? Are you seeing this? What are your thoughts on California? One commenter here, Paul, says California will be super rich and super poor. I totally agree with you. You go to Beverly Hills, Paul, you're going to see houses on the market for $30 million in Beverly Hills, but then a lot of other people in California can barely even afford to pay their rent. Rob says, I'm building another home right now. The comps are $450. My total cost, including land and materials, $120. I do all the labor with my own hands and hire no labor. Well, that's great. Is that in California, Rob, or is that in another state? Code Bath Salt says California is tech companies and homeless camps. Sadly, that is true. I mean, if you go to San Francisco, it's a bunch of tech bros. And it's unfortunately a lot of people who are homeless in San Francisco. There's a lot of people really struggling in San Francisco, also in LA. Oh, okay. Here we have a great comment from JK. JK, you often have great comments. I appreciate it. Are you going to address the fact that there's a shortage of housing in California and LA by design, especially after the fires made it worse? So this is a good point. I want to be clear about this. California does have, let's just call it, a shortage of housing. And the way we know this, everyone, is by looking at inventory. So there's 74,000 homes on the California housing market. That is third most in the U.S., behind Texas and behind Florida. Now, California is by far the most people, but its inventory on the market's half of what it is in Florida, despite having way more people. Why is that? Well, there's kind of just a perpetual shortage of listings. Proposition 13 in the early 1980s locked in property taxes for a lot of people in California, and they don't want to sell their homes. The result is the inventory as percentage of houses in California, let's zoom in on this, is only 0.9%. Only 0.9% of all the owned homes in California are currently listed for sale. Meanwhile, in Nevada, 1.7% of all the owned homes are listed for sale. So when JK is talking about housing shortage, this is what he's talking about. There's not as many listings, there's not as much inventory. In Nevada, there's 2 times as much inventory for sale relative to the size of the state. In Florida, there's almost 3 times as much homes for sale. In Florida, 2.3% of all the houses are listed for sale. So this is the issue, right? Is there enough inventory on California's housing market to bring down prices? Well, 3 to 4 years ago, definitely not. There was only like 40,000 homes listed 4 years ago on California's housing market, according to data on Reventure App, which you guys can access at www.reventure.app. You guys can also download our mobile app to access this data for yourself. You can do that right after this video. 74,000 homes on the market in California, September 2025. Now that's gone up a lot, but you can see it's still less than it was in 2018 and 2019. So we still likely don't have enough inventory in California to bring down prices significantly. Prices are already starting to drop, but to bring down like that 20-30% crash, we're going to need to see way more inventory than this. We're going to need to see probably double this amount of inventory if we want to see a major crash in California home prices. I know a lot of you guys have been waiting to buy in California. You know, a lot of you are saying to yourselves, like, when are we going to see this price crash in California? Well, it's starting to get better. There's more inventory. Values are starting to drop, minus 1.6% over the last year. Our 12-month forecast really varies by area, but the thing to compare this inventory to, everyone, is the sales. The sales, remember, are plummeting. It's the lowest sales volume literally we've ever seen in California's housing market. So we have perpetually low sales, lowest sales on record, mixed with inventory rising. So this is getting better for you as a home buyer. Make no mistake, it's shifting more in your direction. Our home price forecast score for California has shifted into a buyer's market. Reventure has California now as the biggest buyer's market it's been in the last 10 years. So this is all good news. And I said a second ago, right? Like, is this going to mean that for you guys out there who've been waiting, now is going to be your time at the end of 2025 into 2026? Well, I think the cards are starting to shift in that direction. It just really depends on where you look. Let's take a look at a couple more comments here, everyone. Miggy is asking when he should buy in the Central Valley. That's a great question. Lakers is saying so much inventory. Well, I would say it's a decent amount of inventory. It's still not yet so much. We're not at a Florida level of inventory yet in California. Jonathan says, if you plan on moving to California, you'd better learn Spanish. Well, I would actually say that about Florida. I was thinking about moving to Miami at one point. I stayed in Miami for 3 weeks. And part of the reason I didn't move to Miami is I don't know Spanish. I literally felt like I couldn't live there if I don't know Spanish. I've spent a lot of time in LA. I never felt like I needed to know Spanish living in LA. Roadworthy has a question. California foreclosures. This is a great question. Are we seeing foreclosures in California on the market? This is something I kind of want to dive into with you guys, because I think this is another reason why maybe we haven't seen yet the like huge crash in prices. And let's just see if I can find this table for you guys on the fly. We're trying to find the foreclosure rate in California. Can I find the foreclosure rate in California for you guys? Because the one interesting thing is that California's market really crashed last time around. California's market, I mean, look at this, everyone. This is actually fascinating. California, and I'm going to move my image here just so you guys can see. The blue line is the 90-day delinquency rate on California's housing market. And you can see in the last crash, California's delinquency rate was really low, actually, in 06, 07. It skyrocketed to 7% in 09. And these delinquencies ended up causing a lot of foreclosures, the blue line. By 2010, 4.3% of all mortgages in California were in foreclosure. Now, where are we today? We're only at 0.1% of all mortgages in California are in foreclosure. 0.1%. The delinquency rate for 30 to 90 days has risen, but we still are only at a 0.4% delinquency rate for 90-day delinquencies. So we still are not seeing the foreclosure activity that we saw in the last crash. And that's one reason why prices have not crashed, right? Prices are only down 1.6% year over year. Why? Well, mortgage defaults are ticking up, but they're still pretty low. They're basically in their band from where they were before the pandemic. They're not yet at the range of 2, 3, 4% like we saw in 2009. So if you're someone wanting to understand what would need to happen for California prices to go down 40%, we need to see more foreclosures. Now, I want to just point you guys to this red line here. What is this red line? This red line is the percentage of mortgages in California that were in forbearance. And in 2020, 7% of mortgages basically were delinquent and were in forbearance. Almost the same as it was in 2009. But these mortgages never became foreclosures because the federal government and the California state government did all types of things to stop these forbearance and mortgages from actually going into foreclosure. So we did actually have a big spike in mortgage defaults 5 years ago. The government blocked those mortgage defaults from actually turning into foreclosures and providing much needed inventory on the California housing market. And so, folks, if those forbearances didn't exist 4 or 5 years ago, we might have already seen California home prices down 30 or 40%. But of course, they blocked the foreclosures. Even 2 or 3 months ago, they were still blocking foreclosures in the FHA mortgage program. Now we're going to see more foreclosures likely in the next 6 months due to the fact that the FHA is going to start actually foreclosing on some of these people who have delinquent mortgages. But I think it's important for some of you to understand what happened in California's housing market last time around, 2007, because when I go in California's when I go and look at homes in California, right? When I go and look at houses, and I go on Zillow, right? You see some crazy stuff, right? Like if we're in LA to buy a house, how much you got to pay? This is a 3-bed, 2-bath house, 1,200 square feet. How much you got to pay in LA to buy this house? $1.2 million. Wow. Monthly mortgage payment. I'm going to zoom in on this for you, everyone. What's the monthly mortgage payment on this house in LA? $9,500 a month. Oh, what is that per year? That's $115,000 a year, $120,000 a year to buy a 3x2 house. I mean, I think they did an okay job on the renovation, but folks, would you pay $10,000 a month to own this house? That's the going rate in Los Angeles right now if you want to buy a house. $10,000 a month to buy it with the mortgage. And so, people try to say like there won't be a crash. Like I hear a lot of California realtors say, there's never going to be a crash in California. They say, oh, it's never gone down. It won't ever go down because it's such prime real estate. But folks, just look at the numbers. $10,000 a month, mortgage, taxes, and insurance to buy in LA a 1,200 square foot home. Who can afford that, especially in a down economy? People in media in Los Angeles are struggling to find jobs. Incomes are going down for many people in Los Angeles right now. Where are people coming from out of the woodwork to buy houses? The answer is they're not. Home sales activity in Los Angeles and Southern California is at the lowest level that we have seen on record almost. So the demand has already collapsed, right? The demand has collapsed. The question is, are we going to see the listings go up and the mortgage defaults go up enough to cause that 30 to 40% decline in values? And you guys can let me know what you think about that. Do you think we're going to see the foreclosures go up enough, the listings going up enough to cause that 30 or 40%? Dave Johnson says walking on eggshells in East County, San Diego. El Centro is not so bad. When you say walking on eggshells, do you mean about the housing market or do you mean about crime? I'm just really curious. Rob just said, my wife just inherited 4 paid homes in Santa Barbara. They've been rentals for years and rent $5,000 a month. This is actually a really interesting point. His wife just inherited 4 paid off homes in Santa Barbara. They've been rentals for years and $5,000 a month. There's actually a lot of investment properties in Los Angeles, in Northern California, all across California, basically that have been kept through the family to lock in the Proposition 13 property taxes. So what's wild is that there's houses in San Jose, for instance, where the house is on the market for $3 million, the owner pays $2,000 a year in taxes. That also do with Proposition 13 in the early 1980s that basically locked in property taxes for existing owners. And I believe, correct me if I'm wrong, I believe you can actually pass some of that down generationally. And so you've just seen people kind of hold properties because they don't want to give up the low property taxes. But as more of the baby boomer population ages, in California, I believe we're going to see more listings hit the market over the next 10 years as more homes pass through to younger generations. About 70% of homes that are inherited end up being sold in estate sales. So 7 out of 10 homes that are passed down through an estate sale and are inherited end up being sold. California actually has a lot of older homeowners who've been holding onto their homes for 40 plus years. And I think we're going to start to see some of those people age out of their homes. I think we're going to see some of their children sell those homes. Rob, I'm curious, are you guys going to keep those homes? Are you going to sell those homes? You can let us know in the comment section here. Here we have one commenter saying prices in California are still going up. That is not true. So I find like these comments amusing. People say prices are still going up. That is not true. And I just want to like kind of just show you guys this so you can understand that that's not true. Zillow's seasonally adjusted home value index is down 1.6% over the last 12 months in California. And then Realtor.com's median list price is down 2.5%. So both Zillow and Realtor.com are showing that home values and list prices are officially declining in California. So it is not true that home values in California are still going up. Important for you guys to know that. Let's see here. Yorba Linda, how much will it decline there? I believe Yorba Linda is where the very healthy people are who live until like 90 or 100 years old. Chris Brisson says, law changed. You inherit Prop 13 basis only if it is your primary residence. That's really interesting. So folks, this is an important point about the technicalities of California's housing market. According to Chris, he's saying that you can only inherit Prop 13 tax basis if it's your primary residence. That seems to suggest that children inheriting the house to then rent it out aren't going to be able to inherit the lower property taxes, which means more of them will be forced to sell. More of them will be forced to sell. Rob says you can pass it down if you put it into a funded living trust. Your property tax will not increase if you do it that way. So I guess maybe there's tax loopholes, but I would suspect that maybe not everyone knows how to put it into a funded living trust. Maybe some people do. I wouldn't be surprised if we see more listings hit the market. All right, let's see. JT is saying inventory in Elk Grove is 0. He's saying inventory in Elk Grove is 0. Is Elk Grove, where is Elk Grove? 95624. Is that near Sacramento? Is that near Sacramento? Yes, it is. Elk Grove is to the south of Sacramento. Is he correct? Are the listings 0? Well, the listings are still low. They're not 0, but there's 69 homes for sale. You could see here, Jason, that's below the long-term average of 83. So you're correct. There's still an inventory shortage in your zip code. What's the days on market, though? What's the days on market? Days on market's up to 44, so it's the second highest DOM. Our forecast for the next 12 months here in Elk Grove is flat. So we have a flat forecast for the next 12 months. If you guys are trying to do the type of analysis to figure out whether you should buy a house, buy an investment property, whether you should sell, whether you should rent it out, you got to dive into this market trends data available on Reventure App. We source it from Realtor.com. You got to look at the days on market. Take a look at the price cut rate. Are sellers cutting prices? You can see the price cut rate here is up slightly from the long-term norm, but we don't have enough inventory yet to cause prices to go down meaningfully in Elk Grove. Justin has a question. What do you think about Fresno's unemployment rate at 7.9%, the highest in the country? Fresno. Now, Fresno, everyone, is in Central California. Central California. Here's Fresno. Basically smack dab in the middle of the state. Now, Fresno is a market where values are flat year over year. Fresno values are flat year over year. Typical value is 400,000. This is one of the cheaper places you can buy a house in California. Let's actually look on Zillow and see what's in Fresno for sale right now, because Fresno is a market that's affordable for California, but it's still kind of expensive compared to other cities. Like Fresno prices kind of look like Nashville prices. 470,000 for a 3-bed, 2-bath. 1,800 square feet. Mortgage payment would be $3,400 a month. What do you guys think about that? $470,000 for this house in Fresno. That's some interesting carpet they got there. I've never seen that type of design. Kitchen looks like maybe it was updated 15 years ago. The house isn't bad though. Looks livable. Looks kind of nice. Good natural light. $470,000. Wow. Let's see, $3,300 a month for your mortgage. Let's take a look at the listings history here. Oh boy, seller is trying to make some money on this one. They bought it for $371 in 2020. They're listing it for $470 today in 2025. So they're trying to make essentially a 26% profit over 5 years. It's not bad, actually. And this funny folks, this house sold for $387,000 in 2006. That's kind of crazy. So Fresno and a lot of California crashed majorly after that last bubble. Sold for $387 in 2006 and then sold for $371 in 2020. So in 2020, this house sold for less than it did 14 years prior in 2006. Now the seller's trying to list it for 26% more. Are they going to get that price? Let's take a look at this zip code, 93722. Let's do some analysis on here, live, spontaneous analysis. 93722. If you guys are a home buyer, this is the type of analysis that you need to be doing for your market to understand where prices are heading. Well, in 93722, values are down 0.2% in the last 12 months. The question is, where do we think they're going to go go in the future. We think they're going to be about flat in the future. So this seller might have a decent chance of actually selling this house, because in the last 5 years, prices have gone up 44% in this zip code. This seller is listing only for 27% more than they bought it 4 or 5 years ago. So I actually think this seller might have a decent chance of selling this house. You can see Zillow actually thought the value estimate was 504. They came to the market lower than that, and they have a ton of saves. Maybe they're trying to attract a bidding war. But I think this is a house that's probably going to sell pretty quickly based on the data. All right, everyone, what else? 95687. Houses on market up to and over 120 days. Prices are dropping, but still too high. Sellers are being greedy, which of course everyone wants top dollar. 95687. And folks, when you say the zip code, also give me the city. Give me the city when you say the zip code. 95687. We're going to go all across California here. We're going to go all across California, see what's going on in this market. So this is Northern Bay. So this is, I guess, like across the bay. There's a Vallejo, Fairfield area. 95687. Values are down 1.6% in the last 12 months here in this zip code. So the values are dropping. You're right. Days on market. What's the days on market look like? They were saying 120 days in the comment section. I don't think it's 120 days. We have 46 days, Solano County. Now that's the second highest DOM for September going back 10 years. So days on market is up a lot. We actually have a minus 5.6% downward forecast for this zip code, Solano County, Fairfield, Vallejo Metro. Minus 5.6% is our 12-month forecast. You see that DOM creep up. That's telling you the sellers are going to get a bit more desperate. And again, I want to ground you guys in the fundamentals here. Why is the data on Reventure App showing rising DOM in California? Why is the data showing rising inventory in most zip codes? Why are prices starting to drop? It has to do with what I told you at the beginning of this video. Collapsing job openings, collapsing home sales, record lack of affordability, and continued outbound migration. So those things are all still happening, right? Those are major headwinds on the housing market. So if someone were to come to tell you, right, like if you were to talk to a realtor who tries to tell you like, oh no, you should buy now because California's housing market's great. Understand, go back to them. Home sales down 40% from the long-term norm. 240,000 people left the state in 2024, according to the U.S. Census Bureau. Still costs over 50% of income to buy a house, and now the job openings are going down. How does any of that add up to a bullish take on California's housing market? Well, I'll actually give you the bullish take. I'm going to give you a devil's advocate here. Why would you want to buy in California? Why would you actually want to buy in California right now? Even with all those negative headwinds, could it still be a good place to buy in the long term? And I think, yes, if we're talking 10 to 20 years, I think California is a good place to buy real estate because it has a lot of geographic constraints on building. You know, it's hard to build in San Francisco. It's hard to build in the Bay Area. There just isn't much room. It's hard to build in many parts of LA. There just isn't much room. Same with San Diego. There just isn't a lot of room. So we can't really build that much. San Diego County only had like 3,000 single family permits in 2023, 2024, which was like 10% of what Austin, Texas had. So they're just not building enough homes in California, which means in the long run, there'll be upward pressure on prices. Additionally, California has shown to be historically, you know, where the epicenter of innovation in the world is. Whether it was the dot-com bubble, now whether it's through the AI boom, California is where these ideas get created. It's where the technology gets created. I think that's probably going to stay in the long run. California is going to stay the leader in innovation. So I think there will always continually be wealth coming to California, which is why I think over 10 to 20 years, California is a good place to buy real estate. However, you have to ground yourself in the reality of what's happening in the state today. What's happening in the state today is not good. It's not good by any measure. High taxes, record home prices, record mortgage costs, job openings plummeting. I mean, all of that adds up to real problems. And I just want to show you guys a quick article on the issues in the economy. It just came out in the Wall Street Journal, talking about how LA's entertainment economy is looking like a disaster movie. This article came on the Wall Street Journal about a week ago. Today I'm filming, it's October 8th. It came out October 2nd. And it's talking about how, you know, it's really difficult right now for people who work in LA's creative economy, writers, people who work in video, film, producers. It's really difficult for them to make money. They show the occupancy rate of sound stages for studio productions in Los Angeles has plummeted from over 90% to barely over 60%. So there just isn't the work in Los Angeles right now. There isn't the work in LA. We're seeing fewer writers reporting earnings. And this is just filtering through. Like so much of LA's economy is people go there to make it in Hollywood, and Hollywood is just in the tank right now. Hollywood is in the tank. And so, of course, that's going to flow through to the local housing market. And then, in Southern California, you have this issue here, right, with Hollywood being in the tank. And then in the Bay Area, you have this issue on this graph. On this graph, it's showing software development job postings in the US. How many job postings are there for software developers in the US? Well, there was a ton of job postings for software developers in 2022. Since then, the job postings for software developers have dropped 70%. Literally. 70% drop in job postings for software developers on Indeed. Before the pandemic, it was 100. Now it's 63. So we're down 37% from pre-pandemic levels on job postings for software developers. That, of course, is going to negatively impact California's economy since it's such a tech-based economy, especially the Bay Area. So you just have these dueling labor market recessions. Southern California is getting hit by the media and Hollywood recession. Northern California is getting hit by the tech recession. And I think the only thing putting a Band-Aid on it, a temporary Band-Aid, is the AI stock bubble, right? The fact that the S&P 500 stock prices are still at a record high, keep going up, that's putting a little Band-Aid on all of this, right? Like it's kind of hiding just how bad the situation is. We're not seeing that many distress sales in California yet. We're not seeing those mortgage defaults skyrocket yet. One reason why is the fact that the stock market's still at an all-time high. So, people who own these $1 million homes in LA, $2 million homes in the Bay Area, if they run out of money or they lose their job, they could sell stock to support their lifestyle. What would happen if the stock market corrects? What would happen if stock prices go down even 10, 20%? Just like a mini correction. I think that would cause a lot of issues maybe in California's housing market. I think you would see more people be inclined to sell their house. And maybe when they listed, they would list it at a more reasonable rate. But what do you guys think about what's going on in California? Do you think that California's market is better than I'm saying it is? Like, do you have any data? Do you have any anecdotes? Oh yeah, Suresh has a great comment here. He's saying, meanwhile, the houses can only be rented for $5,000 tops. It's such a good point. You have houses listed for $1 million, $1.5 million. The monthly payment's $10,000 a month, but you can only rent it for $5,000 a month. So, the buy versus rent differential doesn't make sense. Investors in California are struggling. Like, how could you buy an investment property in California right now and make any money? Biometal is an interesting comment. He's saying, I have what many would consider a mansion in a very nice suburb of Little Rock, Arkansas, $400,000 cost. Sure, maybe there are nicer places on the east and west coast, but I'll stay and enjoy my pool. Someone else says, you pay 13.3% tax on income over 1 million. Be more precise with your information. If your taxable income is above 1 million, the state is taxing 13.3% isn't going to hurt you. Well, I appreciate you giving that designation. I never said that the whole tax rate was 13.3%. It's the top tax rate is 13.3%. The argument isn't going to hurt you. That's kind of an argument from like a socialist, like, oh, rich people should pay their fair share. The way you should think about this from a housing market perspective is people are paying 13.3% top tax rate over 1 million. What are they getting for it? What are they getting for it? Job openings are plummeting, right? This is not a vibrant economy in California anymore. This is an economy that's in recession. It's one of the worst economies in America right now. So you're paying those high state income taxes. And what are you getting for it? You're not really getting career advancement anymore. Again, let's go back to this state income tax. Top marginal state income rate, 13.3% in California. And let's just get the numbers actually by broken down by income. Income tax rate brackets, just so we have the full breakdown. Just so we have the full breakdown. So by the way, trying to, this poster was trying to imply that like, oh, it's not that bad. If you make over 360,000 in California, you're paying double digits. So if you make over 400,000, you're already paying the highest top marginal tax rate in America. If you make 50 to 71,000, you're paying 8%. So there's only about 5 states where the top marginal rate's above 8% to begin with. So if you're making 56 to 70,000 in California, you're paying 8%. That's insane. That's literally insane. And again, you say, what are you getting for that? 7 years ago, you were getting like huge job prospects, right? 2018, 2019, tech economy was booming, VC economy was booming. Even in 2021, it was booming. I would say, your career advancement, future earnings potential in California was worth it, 5 to 7 years ago. Now, I mean, if you work in tech, um, it's a tough slog right now. If you work in media, it's a tough slog. You're paying these high tax rates and you're not getting the career advancement you would expect from it. And this is why California's economy is prone to having big booms and busts, right? Like a lot of people like to think that like prices never go down in California, but that's not true. Prices in California dropped 40% in the last crash. Literally 40% is how much prices dropped in California from 2007 to 2012. Prices dropped in California almost 20% in the early to mid 1990s. So California, the way it's built, it's kind of built in this way over decades and decades where there's like this huge concentration of wealth and there's like this advancement and then like it all falls apart. And I think we could be on the precipice of it all falling apart again, given where the data is. Home sales, lowest level almost on record. Outbound migration, still 240,000 net domestic people fled California in 2024. Job openings plummeting, right? All these metrics are saying it's not good. People are leaving. Job prospects are poor, but it's still expensive. It shouldn't be so expensive when you're having those headwinds. And that's the ultimate issue for California right now. And I think it's going to be a good thing. Prices dropping is going to be a good thing, right? Because that's going to, ultimately allow more people to stay. It's going to allow the economy to rebound. It's going to allow more people to buy. Let's see. Insurance is a major issue. That's a great point. DIY guy has a great point. Insurance is a major issue in California. I want to show you guys actually some data right now. ICE Mortgage Monitor. They just did a recent report on the insurance here in California, and it's going up by a lot, everyone. So the ICE Mortgage Monitor, they talked about how property insurance costs are up 11% over the last 12 months. So insurance costs are going up everywhere in the US, but they're going up most in California. So California insurance costs after the fires went up by a lot. So change in average insurance payment by market. Now this is a 6-month change from December 2024 to June 2025. 8% increases in insurance over 6 months. That annualizes to 16 to 17% in a year. So California is basically, if you own a house in California, your property insurance is going way up. And this of course has a lot to do with the Palisades fire. You guys might remember earlier this year, I believe it was in January, Palisades fire. I guess they just arrested someone in Florida for starting this fire, but we'll see if they did it or not. But there was a big fire in California earlier this year, and like State Farm and these other insurance agencies are just like pulling out of California, or they were pulling out of California. So they got an emergency rate height approval in California earlier this year. So State Farm did. So maybe fewer of them are going to leave now that they can increase the rates. It was very regulated, the California insurance industry. California Home Insurer of Last Resort seeks 36% rate hike following January fires. So that's a great point, DIY guy. The insurance is also a big issue. The cost to own in California are just crazy, and they're getting crazier given how much the insurance costs are also going up. All right, everyone. What else do we got? And I'm not trying to be too negative on it, everyone. I like California a lot. I've visited California a lot the last 2 to 3 years. You guys might remember I've done quite a few videos on the ground in California. I think it's a fun place. I think the people there are actually really nice. And, me being in tech and media, those are the two industries I'm in. Like, I love being in California because I'm around people who are in the same industries as me. And I think in the long run, the state will improve. But it's not in a good position right now with how expensive it is. Tax rates, insurance, cost to buy a home. Then you have all the people leaving And then, often, a lot of people like to talk about politics. I'm not going to really talk about politics here, but I think it's fair to say a lot of the cities in California weren't run properly the last 5 to 7 years. Crime and homelessness increased. In San Francisco, they seem to be getting a hold of that a little bit. San Francisco just elected a new mayor who's a much more pro-business mayor, much more pro-police mayor. So that's a positive. San Francisco, I think, might be one of the first cities to actually turn around. Interestingly, values in San Francisco, home values have dropped by a lot. And from Reventure App's perspective, it actually might be a good time to buy in San Francisco right now. And I want to show you some of the data on this because San Francisco, if you put a gun to my head and I had to buy in California right now, I'd probably buy in San Francisco, in downtown San Francisco. And I want to show you guys why. So on Reventure App, we have a data point called overvalued percentage. And what you can see here is that most of San Francisco is actually undervalued. It's in blue. So San Francisco is an undervalued housing market. And the reason why is because over the last 5 years, prices are down, 17%, 22%. There's been a big correction in downtown San Francisco over the last several years. And the result is the home value to income ratio in some of these zip codes, the home value to income ratio is at the cheapest level we have ever seen. So back in 2015, here in part of downtown San Francisco, home prices, condos traded for 20 times income. Now they only trade for 6 times income. So when you see the home value to income ratio in downtown San Francisco well below the long-term average, that's telling you it's actually a good time to buy. And while values might drop another 4% in the next 12 months, according to the Reventure App price forecast, which you guys should access by going to www.reventure.app, you can also download the Reventure mobile app on Apple and Android. I'm not sure if you guys were aware. We are in the app stores. The mobile app is actually a great way to track this data month by month, week by week for you guys if you're a home buyer and investor. But you can see home value to income ratio down here means it's an undervalued market. And I actually just want to show you a listing that I found in San Francisco to prove this point to you, how much the prices have actually gone down in downtown San Francisco. This is a 1-bed, 1-bath condo, 750 square feet. You can see it's pretty nice. Floor to ceiling windows. This looks to be somewhat of a corner unit as well. Great views. I would live in this condo. I think this is a beautiful looking condo. Amenitized building. Looks like there's a doorman, a concierge. On the market now, so it looks like it's pending, $499,000. Now it's $670 a foot. But take a look at this. According to Zillow, the Zestimate's down 42% the last 10 years. I'm going to zoom in on that for you guys. 42% decline the last 10 years. At its peak, this condo was worth $960. Now it's listed for $499. Crazy, right? And if we see here the history, this condo previously sold for $820,000 in 2015. So it sold for $820,000 in 2015, listed for $499. It's pending. Maybe I wouldn't be surprised if this goes for above $499, but I think the point is, everyone, the prices here in downtown San Francisco have dropped by a ton, and actually it's probably a good time to buy. So if you've been someone looking to buy in downtown San Francisco, there's already been the crash. Like the crash has already happened here. In most other parts of California, it really hasn't happened, but it's happened in downtown San Francisco. The prices are starting to get pretty affordable compared to what they used to be. This is a good market for you guys to buy in the long run. And ultimately, if you're a home buyer or an investor looking to buy at the end of 2025 into 2026, the most fundamentally important thing you can do is arm yourself with the data about where prices are heading in the next year, and how over or undervalued prices are in your city and zip code. Knowing those 2 data points will give you such abundant confidence in your decision to buy or not buy, and also how much to offer. Because the last thing you ever want to do as a home buyer investor is spend $400,000 or $600,000 or over $1 million in many parts of California and then feel insecure about what you're buying, feeling like the price might crash after you buy, or not knowing maybe if you should buy now or wait. Ultimately, I created a tool for you guys here with Reventure App to help you answer all of these questions, right? And so if you're looking right now in San Francisco and you're looking to buy a house or a condo, maybe you're looking also north of San Francisco in Marin County, maybe you're looking in East Bay. First thing you got to understand, what's the 12-month price forecast? Are values going to go up or down the next 12 months? Well, we can see in most areas, values are going to go down. In Oakland, we think they're going to go down 11% in certain parts of Oakland. You need to know that before buying a house or a condo, right? Because if values are going to drop 11%, you should definitely be really stingy with your offers and try to negotiate hard. Conversely, in the Western Richmond district in San Francisco, we think values are going to go up 2.3%. So that's a very different market in terms of where values are heading in the next 12 months. It's going to affect how you should offer, how you should negotiate. Here in 94121, if you're looking to buy a condo, it's not going to help you too much to wait a year because prices are going to go up. Additionally, look at that overvaluation rate. You can see here values are 21% undervalued. Most of San Francisco and Oakland is now undervalued given how much prices have gone down in the last 5 years. But as we zoom out to the suburbs, prices are overvalued out in the East Bay suburbs. Also, if we go to North Bay, prices are overvalued. And then if we go to some other parts here of Northern California, Central California, the redder the areas are, the more undervalued they are. The bluer they are, the redder areas the more overvalued they are. The bluer the areas are, the more undervalued they are. You're going to want to understand that overvaluation rate, mix it with the price forecast. You can access all of that data at www.reventure.app. Head to www.reventure.app right now, everyone. Do it on your computer, on your phone. Type in your zip code in California and take a look at that data. 90210 in Beverly Hills. What's going on in Beverly Hills? What's going on in the big luxury market right now? Oh my gosh, 90210, the typical value of a house is $4.9 million. This is kind of like where the $1 million listing LA people hang out. 4.9 million. Oh, values are going down here. Minus 3.4% the last year. We have a lot of declines actually happening here in central to western LA. People didn't really predict this after the fires. People thought the values would go up. Well, they're starting to go down. To access the price forecast, sign up for a premium plan. The cost is only $49 to access that price forecast. I would also recommend you go to the annual pass. You get a 32% discount. You can access this data on home price forecast and overvaluation for the next year, $33 a month. Ultimately, that's less than 0.03% of the cost of buying a house in California. Massive deal for you guys to get peace of mind on buying a house and hopefully save some money if you're buying a house in these areas where values are going to go down. You can use it to negotiate. Also download the Reventure mobile app. We are live in the Apple and Android app stores right now, everyone. Apple and Android app stores. Download the Reventure mobile app on your phone if you haven't already, and make sure to leave us a review as well. We want to hear from you guys. Until next time, this is